everybody. So this is the panel where the unit of measurement is trillions. We don't do billions anymore. We go to trillions. So that's a big challenge. So it's very aspirational. We're trying to be ambitious. And before we start, I'd like to have a show of hands between hype and trillion. What do you vote for? Is it a hype or are we going to trillions? First, the hype. Very few. The trillions? There's a few trillions in the room. All right. So we have an esteemed panel here. I will let them introduce themselves, and then we'll kick off the panel.
Fantastic, thank you. So I am Andrea Vianelli. I am the COO for the asset management arm of Laser Digital, which is a fully owned subsidiary of Nomura Group. We are roughly 130 people span across various jurisdictions: Switzerland, UAE, London, and Japan. We operate in trading, asset management, and VC, and we have also significant interest in Caio, a tokenization platform, which already tokenized Brabant Award Fund, BlackRock, and a few other funds.
Good morning, everyone. I'm Fakhul Miah from GoMining. So GoMining is the world's largest platform for tokenized Bitcoin mining. So we've been operating for 8 years. We have just over 4 million users. We manage our own data centers and have distributed over $500 million worth of Bitcoin to date. And by tokenizing our real-world mining output, we're effectively turning Bitcoin hash rate into an investable RWA, giving anyone transparent, fractional access to the Bitcoin mining industry, which is currently dominated by large-scale miners.
Morning, everyone. Partrick, Barrett. I'm founder and CEO of Members Capital Management. We are a Bermuda-regulated reinsurance asset manager. What that means is we deliver uncorrelated yield to our investors through investing in high-quality, sort of blue-chip portfolios of global private reinsurance contracts. So that's your Swiss Re's and Hanovers and so on. Where does Web3 come into this for us? It's really about the distribution and the product structuring. So.
Right. So I just got a few numbers here to try to size the market before we delve into the discussion. And so the actual real asset world market. So we have 150 trillion of securities out there in TradFi. We have 300 trillion of real estate estimates. We have 20 trillion of US Treasury markets, 8 trillions of money market funds, and 15 trillion of ETFs. So it's pretty sizable. And the number of 1 trillion compared to those mega markets seems, to some extent, seems almost small. But that's not as easy as that, right? So I'll throw the question here. Why are we not at 1 trillion, and what needs to happen to get to that size? What are the blockers?
Hello? Yeah, so from my perspective, there are, I would say, 3 main blockers, but also this can bring few enablers, right? So blocker number 1, the regulatory clarity has been one of the main issues that we have seen in the past. So this is one of the first problem which we have seen, but is now getting resolved thanks to significant regulatory developments across most of the jurisdiction we see. The second bit is the secondary market. So do we have enough and we have sufficient secondary liquidity which will push to have more primary issuances? And then the third one is the composability element. So why someone would ever go to buy a tokenized assets, right? And you can look at the return element, but the main one, which in my view will trigger most of the inflows, will be broader and bigger composability for multiple projects and investment opportunities in DeFi.
Okay.
So my view is it's probably taken a little bit longer than we expected, but it's happening. You know, what is it, in 2022, the RWA space was 5 billion. Now we're at 30 billion. I think it's estimated to grow to anything between 3 and 10 trillion by 2030. For me, it's a case of you need the infrastructure to be in place, you need the regulatory support, but you need someone to move first, a big, traditional player to move on chain. And I think, during the last few years, we've seen that. Take BlackRock as an example. They put their Biddle fund on chain. You're now seeing pretty much, tons of companies offering treasury. So it's happening. It's starting with the most liquid, easy to understand, transparent assets, treasuries, money markets. I think when we see things like real estate, that's when it will really kick off. And so far, real estate's been a bit tricky because the way it's been done is it's been packaged under SPVs on chain, not, very efficient, but we're now starting to see bigger players, try it out. In Dubai, we've seen 2 instances where there's been apartment complexes put on chain in partnership with the local regulator. So it's happening, it's just taking a little bit longer, and it's just about building trust.
Yeah, well, I agree with all of that. I mean, I suppose I would only add, it becomes very, very large when you're bringing in new money and new investors and not sort of only in the existing ecosystem. So it's all of those things, but I think it's also really, one, creating products that are compelling as a tokenized or digital asset form, but really also building the relationships with the distributors who are going to take these products to their investors and essentially tell their clients to buy them, right? People buy these products kind of when they're told to buy them in many cases. And I think once you've leveraged, and as you say, it's certainly happening and it's coming, but I think you hit the trillions beyond the billions when you are bringing in new investors who say, yeah, I will hold my real estate exposure or reinsurance or whatever it may be in tokenized form because that's how I've accessed it and that's how my private bank or broker dealer or whoever has approached me to gain exposure.
But yeah, if I'm a devil's advocate and I'm a large TradFi asset manager, and I'll put it to you, what is my TradFi client getting from a tokenized assets, right? I'm not talking a crypto native, someone who in the ecosystem, but someone who's on the other side. What would make them embrace a tokenized asset?
So my perspective is twofold, right? First question you should ask yourself is, does this product really need to be tokenized, yes or no, if you're a TradFi player? Because the moment you can already access the product, the moment you can already distribute the product, and the moment there are no significant cheaper, better, faster type of dynamics, well, actually you don't need to tokenize a product. It's not like a mandatory thing that you must do to be in the space or to somehow be innovative, right? So the real advantages that need to come from tokenization are better distribution, for example, thanks to fractionalization, cheaper, and this is one actually of the blockers that we have seen in the past, because due to corporate law issues and regulatory issues, it was really difficult to avoid the duplication of wrappers enabling you to access the product. So that's where native tokenization can also bring significant economies of scale, and that can enable you to save when you do tokenize a product and the product is actually fully running on chain. So this is one of the additional pushes that can bring a traditional allocator to look at tokenization, both from an issuance perspective, but also from an investment opportunity perspective, right? So why would we need or why would we want to invest in a tokenized product in the first place? And this is also linked to the other element that I was mentioning before, which is the secondary element. Is tokenization bringing more liquidity? Can I do more with the product thanks to its tokenized features? And this is where the element of composability comes into play. Because if you have a traditional money market fund, well, you can definitely use it as a collateral in a TradFi, but say that you want to access DeFi because you have better funding rates, because it's cheaper to borrow on DeFi, because you have more yield opportunities, well, you do actually need to have something which runs on chain. And that's where tokenization and compliant tokenization comes into play.
So basically, we need to digitize the entire value chain. We can't just digitize the issuance. We need to have the entire ecosystem that is straight through, really.
Absolutely. If you have just an entry point and there is no exit or no utility, it's useless.
Okay. Any thoughts?
Yeah, if I completely agree, and if I was to add two points to build on that, I think, what value do you get that you don't already get? So for me, one thing is the blockchain is 24/7. It operates 7 days a week. Financial markets don't. So when products become more sophisticated, you'll have the ability to trade them at any point in time, wherever you are around the world, which you cannot necessarily do with certain, traditional markets. The other thing is, and I guess it goes back to the original ethos of the blockchain, is accessibility and democratization. I think, right now we're seeing institutional grade products going on chain, so it's, the existing participants that are using it. But when you have the ability at scale and the technology to put something like real estate on chain, and you could have an individual that can put $100 into it anywhere around the world and generate yield as an investment, that's where there'll be a real breakthrough. And I think it's just a case of, it's going to take time, because how do you give that individual the accessibility? But, look at the new generation. The millennials, the Gen Zs, the vast, vast majority of them are already on chain. So it's coming whether we like it or not.
Yeah, the new generation is coming with a massive amount of wealth transfer, right? I mean, the Generation Z is going to be a lucky inheriting with a lot of trillions. So I guess there's going to be a sea change in the acceptance of those technologies from our people following us.
I'll say something slightly controversial, which is echoing something that was said on a panel yesterday, which is businesses sort of need to constantly evaluate whether it even makes sense to be in Web3, and maybe sort of deriving from that point, at least from our perspective, if you're building a business, I think it pays to be agnostic and meet investors where they are. If you take a long view and think in 5 or 10 years, the blockchain will simply be an abstraction, and the technology that, this all runs on, I think it's useful to also target investors who don't necessarily want their product tokenized, but, with a view that in some period of time you'll be, the vehicle that brings them to that. So with the wealth transfer, you're seeing a different generation who's probably more open to tokenized products, but they're not necessarily there, or perhaps they have a budget for digital asset products, but really they just want a wrapped traditional product. So I think it's helpful to be very open-minded about who you're targeting and kind of what the long game is to bring those investors in, because again, I think that's when you get to the trillion beyond the billion.
So someone mentioned earlier fragmentation. It seems to me that's quite a pain point in the tokenization, right? Because if I look at equities, real estate, various private credit, every tokenized workflow is different, right? Sometimes it's intrinsically needed, but sometimes you wonder whether it's not too fragmented in terms of, for instance, an SPV or natively issued. And I mean, it seems that we haven't yet formed a real consensus on the best access to market on those tokenized assets. Am I right?
Yeah, well, look, if you look at what happened in the last 15 years, right, I see 3 main eras of tokenized product and tokenization. The very first one was, well, you know what? You start launching a fund, so a traditional wrapper, which invests in digital assets. That's step number 1. Then the second era has been, well, you know what? Now you actually apply the technology and you tokenize like traditional products. So you tokenize money market funds, tokenize bonds, whatever. So where are we heading, to address your question? In my view, we are heading toward what I call the wrapless era, where you do not need anymore to pick an existing type of product or solution to tokenize and to create a product around that. You build natively on chain, so there are no wrappers, which means no duplication of cost, which means real innovation, which means that everything runs on chain. And those wrapless products come in the form of vaults, which in my view bring massive benefits, very easy accessibility, and they will become mainstream They are already growing significantly. And this is where I believe the real innovation of tokenization comes from. And I think if I want to also think a bit more into an institutional perspective, like most of the largest firms at the moment looked at tokenization just as I'll build my own, it's a silo, maybe cooperation with some other players, but this is not what tokenization should actually address, because this is just another form of private cooperation. Tokenization instead should lead to broader public access, and this is where the real innovation comes from. So everyone should be able to access in a free, easy, and absolutely borderless way.
So I agree. I think, you know, if you think of the three aspects, one is trust. And I think, you know, the longer blockchains go on, the more products that exist and, you know, that work, the trust is built up. I think the technology is definitely improving. I think what's probably lagged is the regulatory space. It's taken a very, very long time. Even now, you know, I've been speaking to a few attendees who have said they have challenges in investing in, you know, blockchain-based investments because, you know, their local bank doesn't support it. And so, you know, getting the traditional space to catch up has been hard, but I think now we're somewhat in an arms race. You know, you're seeing the UAE push on ahead, you know, with regulation. The US is now super pro digital assets. You know, Europe has started to catch up with Mika. You know, we're now hearing about ESMA oversight. The UK could do better, you know, my homeland, but we're getting there. So I think when they catch up and they push forward, and now they're literally being dragged by the industry, it will just make it easier to do things on chain. You know, the technology is there, the use cases are there. It's just a case of like there are, you know, certain parties holding us back.
But does that mean we need an abstraction layer that kind of abstracts away all these concepts or workflows, and or are we going to more like vertical silos of access to tokenized assets? It's a big difference in architecturing the go-to-market, I suspect.
Yeah, I think, you know, there is a lot of interoperability across chains now. You know, you see things like, you know, account abstraction that exists on Ethereum, so you don't need to, you can now use, you know, social logins, you know, you can use gasless transactions, etc. It is still somewhat siloed, I agree. You know, you have different chains. Ethereum is definitely dominating the RWA landscape, but I think interoperability is becoming better, but it could certainly be improved.
Yeah, I mean, I suppose from our perspective, we're looking at it very differently in that we're primarily targeting people who are, let's say, not in the space and trying to bring them in, or perhaps they're in the space, but they're very focused on a different type of asset than we have. And generally in our conversations, people aren't, you know, we meet them where they want to be. You know, that's on whatever chain and whatever custody they prefer.
Yeah, so that's actually the approach we took. So, you know, we tokenize Bitcoin mining, so anyone can access an industry. You know, you cannot mine Bitcoin at home anymore. So we originally built it on Ethereum because it had the best contract standards. But as other chains became more popular, it made more sense for us to go to them. So, you know, we went to BSC, we went to Ton, we went to Solana. But for the end user, it's a seamless experience. When they're using our application, they don't really need to know what chain they're on unless they want to. So I think right now, yeah, you're still in a world where you have to go to the user, but it's starting to converge. But, you know, that's where we kind of need our technologist friends to do their part.
Yeah, if you look at the success of the ETF is a wrapper, right?
Yeah.
In tokenization, it can be seen some aspect of it as a wrapper also. And it's simple, it's liquid, and it moves fast. So I'm just curious, wondering what will be the ETF for tokenization? Do we need and also, if I'm a Gen Z in 10 years, will I have like an access to a marketplace of tokenized asset in an integrated UX UI, so I can pick and choose where I can buy fractionalized assets. I mean, that would be, I suspect, a great leap to get to the trillions if it's abstracted away so also retail can come in an easy way.
Yeah, absolutely. I mean, one may wonder why they have already tokenized ETFs. They were already quite easy to buy. So the only, to me, valid explanation is, what else can you do now with a tokenized ETF? And I think adopting the same approach, you should think about, well, first goal, I need to use as few clicks as possible to have access to an investment product. And the moment you manage to solve this first challenge, that's where you start gaining attention. I don't want to call it gamification, but what I mean is the faster and the easiest is to get access to an investment product, well, the higher is the likelihood of distribution. Of course, leaving aside the performance of the underlying asset. Then the second challenge is, okay, now that it was that easy to buy this product, what can I do with it? Because this is where I believe, unless you are a sophisticated investor, a retailer who is buying a fund or is buying like a share in a traditional format, what is this person doing? It is just keeping in the account. Well, that's where I believe tokenization brings the advantage. Because the moment you can use it for other things, as a collateral, you can actually exchange it easily, send it, I don't want to say as a means of exchange, but you can easily transfer it, or you can pledge it, or you can get leverage on that. That's where I do believe the advantages that the technology can bring the scalability.
So what's the position of the large incumbents on this journey? Do you see them as cautiously positive, defensive, or all in for the technology?
I think they're being forced to participate, and now they're not exploiting. They're taking up the opportunity. BlackRock's a great example. They're the behemoth of the industry. They started with the ETF, like the Bitcoin ETF, not tokenized, but they tokenized the money market funds with the BIDL. They just got, I think, an application. Maybe they already received the license to tokenize ETFs. So, and generally, where BlackRock leads, others follow. So it's, just a matter of time, in my opinion.
Yeah, I agree with that. I mean, there's certainly incredible tailwind as institutions come in, and I am personally of the view that in not too far into the future, we're going to be looking at a world that's not entirely dissimilar, even if the technological rails are different. But I would expect to see the large institutions leading on this, and some of the principles of traditional finance are still the same things that drive people to make large allocation decisions. But I think it opens a door for a lot of innovative things and interesting, structured, sort of composable products that couldn't exist otherwise. But ultimately, I think it's an incredible tailwind to have the institutions in.
Maybe, can I just add like a personal tale about how these big institutions have changed their mind and then changed their approach to tokenization? So a few years ago, let's say roughly 3.5 years ago, I was in a European country and speaking with a very large bank. And I was speaking with one of their members of senior management and tried to explain the advantages of tokenization. And this person looked at me and, in a quite posh, arrogant English, told me, I'm still wrapping my head around on why should I do it. I really don't see a future for tokenized funds. And then you see BIDL. Look at the performance of BIDL in terms of how easier it has been and how fast it has been to raise assets and how popular the product became. And now you see everyone rushing into it and saying, oh, we are large believers in this technology. We want to do pilots over pilots. Well, the reality is you shouldn't just stop at pilots, because pilots are great for marketing. You should go toward adoption. And this is, for example, what Nomura, a very traditional Japanese investment bank, was pioneering the space by saying, I don't just want to launch a pilot. I actually want to be all into the space. And this is, to me, the shift which we have seen in the last 18 months. So a huge follower effect. So you had someone getting into the space, demonstrating that there was a real juice behind tokenization and there was a real purpose behind it. And now everyone is rushing into it. How long it will take for having everyone, even the most skeptic, getting into the space? I don't think it will take decades. I think it will take maybe, I don't want to call it a few months, but let's say definitely less than 3 years, as soon as these other hurdles that we were mentioning before will be solved. Now, just to conclude on this one, like the amount of crypto skeptic posts that I see on LinkedIn from professors, academia, regulators, and wherever are getting less and less every month passing by and every successful launch being announced. So my take is just a question of, let's say, few years.
Cool. Maybe to wrap up, I'd like to ask each of you what do you see the future of your approach to tokenization, your use case, each of you, and then where do you see this market in 5 years' time with a focus on adoption?
So far we looked at tokenization from two perspectives. One, we have invested in multiple tokenization projects, including incubating one. The second one, we have tokenized our own funds. So what's next? In my view, what's next is what can we do more? How can we go beyond the wrappers? And this is what I was mentioning when I was referring to the wrapless era. So this is where I believe most of our focus will be on, including continuing building on-chain, managing on-chain, and provide services on-chain.
So our view's always been about accessibility for individuals to participate. Our industry, Bitcoin mining, is, it's populated by large players. You can no longer mine at home. So we started by providing fractional access as low as $30. But we want to go further. So we're about to launch our mine now, pay later model, where you can purchase a miner up front and pay for it in installments, making it even easier to access our platform. And then separately to that, on our institutional side, we're building institutional grade structured products that give direct access to mining economics without needing to worry about the operational costs or the headaches. So it's just pure long-term Bitcoin yield. So for us, it's access, to the industry, and we think that's very important.
Yeah, I think there's two things. One is, I think in the short term, maybe 2 or 3 years, I look forward to a world in which I don't have to whisper the tokenization part necessarily to figure out who I'm talking to and whether they're receptive to the message. So I think there's a period where really both are accepted and being agnostic is a big benefit. For us, again, similarly, it's really about access, and I think that's the attraction of what we're able to bring. We're in an industry that is dominated by investors who are pension funds and endowments. And to plug for reinsurance for 2 seconds, it's another one of these high quality private assets like private equity or private credit where investors have gotten comfortable and now they're looking for new uncorrelated attractive assets. And so for us, this is a pathway to that, to access new investors across a broad spectrum. Some are in Web3, some are not. In 5 or 10 years, maybe it's sooner, I think everybody will be tokenized and we just won't talk about it too much.
So when a trillion for the global market? 5 years, 10 years, never?
My view, well below 5 years.
I think we'll hit $1 trillion by the next bull market, 2030.
Yeah, I agree with that. I think it comes sooner than we think.
All right, thanks a lot. We found $1 trillion. We're going to get there. So we have a lot of work to do, but I guess it looks good. Thank you very much.